Hi, thanks for joining me again. This week I thought we'd have a look at the US dollar and gold futures on the weekly charts. They were perhaps the most interesting two charts this week when I did my weekly analysis. This is the US dollar index futures weekly chart. If I pan out a bit, you can see that this was what happened when the coronavirus issue started to emerge and uncertainty came into the markets. And for a brief period, prices trade sideways after some serious whipsaws. Then the market started heading lower. There was a fairly good attempt to stabilise the markets here, and for that reason this breakdown just here has always had an interest for me, because this is where the market's traded below until just recently. So for that reason I'll put in a line at that level. At 94.38. If we zoom in a little bit from there, now price continued lower for a substantial period of time, but you can see here that price made an attempt to consolidate. There was some buying in this period, but also a lack of supply, selling pressure reduced, and price did actually attempt to break out, and it made a pretty good fist of it for a little while. But the coronavirus issues were still a problem, and price then came back down. At this point, on this very high volume bar, it was questionable which way the market was going to go. You had these two bars where supply had reduced, that selling pressure had reduced. But it was still a bit uncertain as to whether this was the sellers being absorbed by the buyers or the buyers being absorbed by the sellers. But on this bar, once price started moving above the high of that bar, it was pretty obvious that this was buying support that came into the market, and price accelerated higher that week. In response, you would generally see a period of consolidation, because whenever price rises substantially in a relatively short period of time, it always draws out some supply, whether that be from stale holders to the left, like this, or whether it be from short sellers, or whether it be from profit takers. But either way, whenever price rises substantially over a short period of time, it draws out supply or selling pressure. Now in this case, you can see that price continued to move higher. It didn't really have much of a period where price moved down and consolidated. For me, well, before I say so, can anyone see what's probably going on here? If you've watched some of my videos, you might have some sort of idea. These were threatening down bars that had no downside follow through, a pressing nature to the upside overall, and there wasn't really any clustering of closes, but that's perhaps because we're on a weekly chart and not on a daily chart. But this is likely a period of bullish absorption. This was an upside consolidation, you might say. It was Oscar's F flag, if you watch Oscar's videos. There was downside follow through on this bar. It only traded adjacent to the previous low, and the next bar was up. So that turned out to be okay, although at the time it was a little threatening. You can see that price broke out again. Now whenever you see a proper breakout bar, you want to see it with an increased spread and generally an increased volume. Here was the increased volume. That's what you want to see. It doesn't have to be excessive volume. You can see on this bar, the breakout bar was on increased volume over the previous two bars, but it wasn't on excessive volume. And this bar was a breakout bar, and it was on above average volume, but it was reduced over that questionable bar that I mentioned at the start. Now, after price broke out here, you can see there is a period of consolidation where price moved sideways and lower to threaten any sellers to come out, and then in response price moved higher, and the last two bars have seen price break out above this important level that I marked at the start. This is a true longer term breakout if it proves successful. You may see price come back and test this line before it accelerates away, because this is a really long term, it's an important level on the chart. But if price is really strong, it might just move away immediately. We'll have to wait and see. But generally at this point there's a 50-50 chance that price will come back and test this longer term breakout line for strength. Either that line or this line. But there's a 50-50 chance at this point that price will come back and test it for strength, prove that sellers aren't there and price is free to move higher. Or the other 50% of the time it just moves higher. May produce an F flag, bullish absorption, as it moves higher. We'll just have to wait and see. But if this proves successful, this is a significant move on the chart and suggests that the US dollar may move considerably higher. We'll have to wait and see. It's just pushed above it at the moment. It's not a confirmed breakout. Now on the gold futures chart, gold normally moves inverse to the US dollar. Now the important part of the gold chart has happened more recently when the US dollar has begun rising from that point. The US dollar started to rise here, and from that point on it started to move higher, and that coincides with this bar. Remember, the US dollar goes up, gold price comes down. Now if we draw a line across there, since then the US dollar has continued to steadily rise, but gold has been very resilient. It came down a little bit here, but it's held on really strongly. Now, there are gold's own fundamentals in the market, and the US dollar provides headwinds and tailwinds for the market, but it's not all the movement. So in this case, gold has been very resilient, and you should take notice when you see any commodities not move in a complete inverse pattern, but in this case gold was expected to move much lower and it's held on fairly strongly. And the same as when the US dollar is falling, if the commodity isn't rising strongly, something's happening fundamentally with that commodity. So I suggest that buyers were actually present in this market. They weren't buying hand over fist, but they were holding the market up because there was a want to remain in gold. Now, here was an important level on the chart, and even more so here. If this level is broken longer term, it would really be quite important. And this was a more minor level which was broken last week. You can see the last 6 bars, 1, 2, 3, 4, 5, 6 bars have all been moving steadily higher. At the same time, the US dollar index futures have been moving steadily higher. So despite the headwinds offered by the US dollar, gold has been moving higher. This is a market that really is showing some strength, and this week's bar was a narrow spread down bar on increased volume, and that would suggest that strong buying support came into the market. On that much volume, as the US dollar was accelerating higher and breaking out above that 94 level, you would have expected the gold price to move down considerably, but it didn't. It held on really well with a very narrow spread. It's only lost a very small amount of ground. This was a strong move by gold last week, despite it moving lower. And if the US dollar does come back and test that breakout for strength, then gold is probably looking to break out above this level, and this is a really important level on the chart. This would see all of this recent weakness behind and below, and gold would be free to move, relatively free to move. It would only be trading way back in the past that would be affecting the gold price, and it would be in a good position to go up and challenge previous highs. This was gold acting quite strongly, and that should be noted. If you look back at what's happened previously on the gold chart, prices moved down from the previous highs and then broken down again. You can see the little gap down there. That was an important gap down. If price breaks out above this level, then it's really leaving behind all the trading up to here, and I would imagine that there isn't very much supply left in this area. We'll have to wait and see when price comes up. There'll probably be some, but a lot of this would have sold as price moved lower, leaving only a small amount of supply left. That's why for me this is an important level here. If price can break above this level, it may come and test it for supply and strength, or it may just continue higher. But the odds are there now, especially after this week's bar only moved very fractionally lower on high volume, and the market has been trading higher despite the strength in the US dollar. It's really suggesting that gold is going to have a crack at that line in the near future, but we'll have to wait and see. Both charts are interesting, there's no doubt about it. We'll just have to wait and see what happens in the coming weeks. But you can see where we're up to, how the market's been moving, and we've got a little bit of insight into the strength in the gold market. Thanks for your time, and see ya.